Good afternoon, guys. Welcome. It's Saturday, March 12th. My name is Dave Coker, and this is Talking About Finance. And you know the routine by now. 7 slides for 7 days, just what me and my buddies on a Telegram channel chat about. We're all in banking or ex-investment bankers, and we figured it out recently. We've got about 1,000 years of market expertise there, and we talk about everything including money. We don't talk about anything else. No girls, no sports, nothing like that. Just money. So, guys, let's start out by what we do every week by taking a look at the markets, and let's see where we are. Now, this is an actual year-to-date performance heat map of the S&P 500, and remember the routine. Green means up, red means down, darker green or darker red means you're down worse, and brighter green means you're up higher. And check it out. We can see that the markets are in terrible shape compared to, even a month ago. We can see that the only sector that's actually doing pretty well is energies. Aside from that, lots of sectors are in the red, and some are deeper in the red than the others. Why? What's going on here? Well, inflation, and we're going to talk about that a little bit later, seems to be on everybody's mind now. Everybody's worried about inflation. And in the US, we can see that inflation is running at a 40-year high. In fact, CPI this week on Thursday, it punched at 7.9% year on year. Speculation is we're going to see an 8 handle on that CPI figure next month. Lots of good chances there, lots of good bets there. This makes perfect sense. CPI is backward looking, and over the past 2 weeks, we've seen the average price for oil alone soar. In February, it was $92 a barrel. I calculated the number myself. And in March so far, again, I calculated it, it's running at roughly 112. So yeah, on that basis alone, higher inflation is on the way. And it's interesting when we look at this, SPX hasn't done that poorly over the past week. It's down about 2.88%. It's down about 11.79 year to date. And this is troublesome because it does have predictive powers about recessions. The VIX traded down to 30.75. The 10-year note closed this week at 2%. So we're going to have to see. The market seems to be reflecting some uncertainty about what's going on with the Russia problem or the problem over in that part of the world. I'm so rude, I shouldn't say the Russia problem. We just got a problem. In my view, and I do speak about this, we should just sit down and be talking 24/7. My God, it's equally both sides' fault because we're battling when we should be fighting. So there's issues there. We're still looking, the market, I should say, is still looking at the Fed engaging in rate hikes, although this isn't clear. We know the chance of a 50 basis point hike has seriously dropped almost to zero. We're still seeing odds favoring a 25 basis point hike, but there is a chance, about a 40% chance, there won't be a rate hike. And we'll have to see how this goes. The US, again, is still a net exporter of energy, oil, natural gas, and coal. And that's a plus for the U.S. economy, as well as the world economy. Hopefully we can take care of some of the problems that we're seeing with energy supplies in Europe. And U.S. economic growth is on trend for 3% this year. We'll compare it to pre-pandemic at 1.5 to 2%. How long this is sustainable for is anyone's guess. Once again, a little bit different view of the S&P 500. Here I've broken it down by 11 sectors. Left-hand side, energy. Booming, 38.5. I do have a fairly large position in ExxonMobil, done quite well. And on the right-hand side, we can see the big loser is consumer discretionary, down some 16.8%. Still hasn't impacted companies like Apple that much, but we're seeing demand for that type of stuff fall in a major way. The fundamental question, guys, is this: are people still willing to spend money? Now, we've got the consumer confidence. And whenever we see the consumer sentiment, whenever consumer sentiment falls, we know confidence is falling. And whenever it's taken such a sharp fall, as we're seeing now, the U.S. enters a recession 12 to 18 months later. It seems almost inevitable at this point. Another factor that's going to drive the U.S. into recession is that savings is starting to run low. Now, of course, there were a lot of headlines, if we go back roughly 2 years ago, about how much Americans had saved. And the savings rate was phenomenal, going back to April 2020. Of course, now in January 2022, it's somewhat different. It's dropped from 31.7 all the way down to 6.4%. And that's troublesome. We're running out of money. And of course, that will show up with consumer spending as well and reflected in consumer sentiment. And here's an interesting one, guys. Now, yeah, we do like to pass these back and forth, and we do chat about them a lot. And this is absolutely true. A good chunk of world's grain is grown over in that region between Russia and Ukraine. And the simple fact is, and this came off some research that I buy, the simple fact is that almost 100%, and this was published Friday, almost 100% of the Ukrainian fields that are normally planted or being planted at this time haven't been tilled at all. Why is that? Well, Ukrainians, God bless them, their attention, as they say here, is elsewhere. They've got other stuff to worry about. And you can see right here what happened with wheat. It spiked to about 94.5%, dropped down. It's only 60.1% year-on-year increase. It's pretty phenomenal when you start to see what happened to the prices at this point. So yeah, this is going to ripple into the food chain. It's going to ripple into consumer prices at some point, and it's going to be sooner rather than later. And this really begs the question, I mean, what is going on with some of these commodities and some of these commodity exchanges? There was some drama this week with LME, the London Metals Exchange. I don't know if you saw this. Wild what happened with nickel. Oh my God. It spiked in one day from a little bit below 50,000 all the way up to 97,800. And basically they stopped trading. And there's a lot of trouble, a lot of skepticism about this. A lot of people are saying, why should we trade on LME if when there's a short squeeze, they just stop trading in the metal? It's a reasonably good question. And keep in mind, these centralized exchanges, they've got all sorts of vested interests, don't they? And, it's the old school guys that really control it. And rumor has it that somebody was caught in a short squeeze, and I know a little bit more about it than I'm letting on, so I'm just not going to repeat 100% of what I know. And he's refusing to pay. LME closed trading in this commodity when prices soared, when nickel prices really took off, absolutely incredible. And he's refusing to pay. They said, we're not going to trade anymore. And people that are on the other side of the trade are saying, hey, excuse me, I want my money. Can't blame them. Now, rumor has it, I did see some people Friday, and rumor has it that if they reopen this stuff, it's going to rocket up close to 200,000, definitely north of 150,000. So we'll have to see exactly how far this goes. It's really interesting. But the question is there really a business here? If they don't reopen trading, there's no business there. But don't worry about it, guys, because we're always going to have Bitcoin. It looks like it, okay? Now, this is an interesting chart. Again, this is from Plan B, and got some really fascinating analytics that he publishes. And I like to look at his stuff. And he's traced Bitcoin and the S&P 500 over time. And effectively, what we've got here is we've got a fairly good correlation, if you want to look at it that way, in terms of where Bitcoin is and where the S&P 500 is going. And aside from that, the colors of the dots talk about where the price of Bitcoin is with respect to the all-time high. And just go through the chart and make sure you can read it and you can figure out where the all-time high is. Of course, we're always looking back in time at an all-time high. So we're trying to figure out exactly where we are with respect to an all-time high that just happened, a near-term high, I guess I would call it. So really interesting relationship between Bitcoin and the S&P 500. Both, of course, have been buoyed up, I should say, by the wave of liquidity that central banks have unleashed over the past 4 or 5 years. And this is why, as I've shared with you many times, in March of 2019, I moved 67% of my retirement money into gold and silver. I was just nervous about all this stuff. And then last month, and I do believe I mentioned this, last month I had a bunch of liquidity, and this is all in my retirement account, by the way, had a bunch of liquidity in my retirement account because, I invest only for dividends. I was trying to think out, what should I buy? What should I buy? Because I don't want to sit in cash. I couldn't find anything that I liked at current prices. So yep, I bought more gold and silver. Now I'm running 71% of my retirement capital sits in gold and silver. Of course, I've got positions in Bitcoin, but not in my IRA. I'm not sure if it's really possible to hold Bitcoin in an individual retirement account in the States or even in ISA, but it doesn't really matter. I've got that stuff external. And I suspected we had word that Mr. Biden was going to publish an executive order, which of course in the States, it's basically he's king plenipotentiary. He has the authority to order pretty much anything, the president of the United States, I should say. And we had good rumor that Mr. Biden was going to publish an executive order on Bitcoin, and sure enough, he did. And when this order was published, I wasn't super worried about it. And I did mention this in my blog a few times. I wasn't super worried about it because I know we're talking about a $3 trillion asset class. And also I'm plugged into the lobbyists, and I knew there's an awful lot of lobbying activity going on by Bitcoin companies, cryptocurrency companies, I should say, actually engaging with lawmakers, right, to make sure that laws weren't passed that would, first of all, outlaw Bitcoin, or actually put tight bonds on it in the sense that it would be regulated and locked down, and the big banks would profit. And yes, we're going to call him Crypto Joe because he came through. We actually saw something pretty good. So it was very, very light, and that's actually positive. And again, if you're curious about this, check out my blog, FinTech Flash News. I've done at least 2 posts on it, and I'm likely to do more. There's more detail coming out all the time. And we're going to start to see these various agencies in the United States government start to interpret the executive order, the mandate of the executive order. And my fervent hope is that out of this, we're soon going to have Bitcoin custody. Because all my Bitcoin, as you know, lives on Trezor wallets. The wallets live in my safe deposit box, and another safe deposit box has the seed phrase. I don't like that action. I want to treat my Bitcoin just like I treat my stocks, my bonds, the bulk of my gold and silver, which is held in the brokerage account. Although I got, some walking around gold and silver in my pocket. But still, I want my Bitcoin to go live with an organization that's going to perform custody and take care of it for me, and nothing will happen. And if something happens because they're regulated, I'll have recompense. I'll be able to recover lost funds. I'll be made whole. Presently, it's a little worrisome, especially when every Friday I buy Bitcoin, and I've been buying it for years, guys. So yeah, I'm hoping that custody will come out of all this. But once again, guys, you're going to have a wonderful week. There's lots of opportunity to make money out there. Just think about how you're going to play all these ops. My head is buzzing. There's so much out there. It's really a question of focus and trying to pick 1 or 2 opportunities and execute those opportunities well, rather than try to get every opportunity in. So whatever asset class you're comfortable in, be it bullion, cryptocurrency, stocks, whatever, make sure you look at the ops and you trade them. And finally, you do need to purchase dividend-paying securities. You don't want to be one of these jokers that insists he or she can trade, because it's all bullshit. Retail people don't trade to make money. I'm making money every day, a couple $100 every day, because of dividends. Any of these traders making $210 a day? No, they're not. Certainly not on a Saturday and Sunday. And in general, they're not. They lie. So purchase some dividend-paying securities, sit back, and get rich slowly. That's it for this week, guys. Take care.